Hello, my name is Maurice Washington. I want to welcome everybody to another episode of Executive Talk. Those that are watching live or those that are watch later or listen later on our podcast, thank you so much for joining us today. Today's topic is navigating high interest rates. As you know, everybody's having a reaction to what's going on in today's marketplace as far as how the rates have shifted upwards, and we really have a lot of concerns, a lot of questions as to maybe when these high interest rates may come back down. But with me today to discuss this is we have Aaron Lee with Mission Loans, and we also have Susan Evans with Coldwell Banker. How you doing?
Outstanding. How are you today, Maurice?
Doing fantastic. Thank you.
Doing
Nice to
great,
see
Maurice.
you. Aaron, you doing good? All right, good.
Excellent.
How's this year been for the two of you so far? It's been kind of crazy.
Different.
Different.
That's a good
Crazy
answer.
was when everything was just going gangbusters. There's a lull, so that part's crazy.
Gotcha. All right. And no, so speaking of that, I think the best way to really put context around this is let's look at a historical outlook from this, and let's look at this together. When I look at this average 30-year fixed mortgage in the U.S. since 1971, this is before my time. We're looking at interest rates, and obviously they started off, it looks like around about the 7-8%, and they hiked up to about 19%. And then from there, we had a downward swing. So in this time frame, and we're starting to see, them creep up a little bit. So let's go ahead and start right here. When I look at this, you look at from 2005 and you look at up until about 2020, 2021, and you're starting to see a decline as far as interest rates concerned. Susan, when did you come into the marketplace as far as being a realtor?
I came into the marketplace right around 2012.
Okay. And so when you look at that particular time frame from 2012 to this time frame, how does this resonate to you?
Well, what resonates to me is when I first bought my first property, which was in the early 1990s, and my interest rate was around 12%. So we didn't really think about it. You know why? Because if you look at that chart, we had never had 3% interest rates ever. So it was much more the norm, and it had actually come down from a lot of highs. So anyway, as far as where it resonated, we had supply and demand that was pretty equal in a lot of the markets, which creates, sometimes a buyer's market, sometimes a seller's market. But interest rates, until we had the pandemic and everything really dropped so low for so long, interest rates weren't the biggest part of the conversation.
Gotcha. Okay. So right now, being that we're in 2023, for this year, are we experiencing more of a buyer's market or a seller's market?
We are still, quite honestly, in a seller's market because of supply and demand. And that means that our sellers right here where they could refinance in the 3% or below area, so
Right.
many of them refinance that they are holding on to their properties and not selling. We also have a lot of corporately owned LLC homes that are used as rentals. So our supply for selling is low, and our buyers continue to listen to so many news feeds about what's going to happen in the future. Unfortunately, nobody has a crystal ball, but the best time to buy is when you're ready. And that's where Aaron can help with the best programs to put you in. And if this graph precedes what we see in the future, then there's possibilities of refinancing in the future as well.
Sure.
When rates go down.
Yeah. That brings up a good point. So Aaron, when did you come into the marketplace?
So yeah, bringing up this chart, it definitely brings back memories, and you can see a clear shift in when I started. I got pretty lucky starting when I did. So if you look at that right around 2000, you can see where it's spiked up right around 9%, and then there, there's kind of a steady run down until COVID. Obviously you see that little
Right.
spike back up, but I came in, rates were around 9%. 9/11 had just hit, and I got out of another business that kind of destroyed. And from then, rates just started coming down, and people were refinancing every 6 to 8 months.
Yeah.
If I could chop a 0.5% or more off the rate, and people were saving a couple $100 a month, that was a big thing, at no cost. So I can look at that and see where I may have from 2000 to 2005, when it started kind of ticking back up a little bit. I I can see in my mind probably, dozens and dozens of people that I probably refinanced 4 or 5 times, just all the way from 9% to 8 to 6.5 to 5 to, all the way down that until they got to the bottom, and then they were like, I'm good.
Yeah.
And yeah, so it's definitely, like Susan said, it's a different time right now, and you just have to, we call it date the rate, marry the home. And if you can find a place that you can afford, that you can see yourself being in for the future, you get it right now, because eventually the rates are going to drop. We can't tell you if it's going to be, in 6 months or 2 years or 5 years, but I mean, history tells you that it usually just doesn't go to one place and stay there for 10 years.
Right. And so when you look at this graph, and what it tells me as well is that you have the marketplace moving fairly aggressively because of how low things are. When you get to a place like this and you start to see an upward tick, is this where we start to see the market, the real estate market, start to stagnate for a spell? Or do you feel like people still try to make, I guess, consciously aggressive moves? I'm not really for sure what to call
People
moves.
still need homes. People are still moving to Arizona. And so with that, uh, that's where Aaron and I work really well together, because he definitely finds the best programs. And we're not in this current market, and correct me if I'm wrong, we don't see some of the programs we did in the past, which are your adjustable rate mortgages and things like that. But what we are trying to negotiate in our contracts when a buyer wants to buy a home is a 3-2-1 or a 2-1 buy down, where the seller will sponsor a rate buy down for the first year, the second year, but the buyer will need to be qualified and financed on the highest rate, the full rate. So that's where some negotiation comes in the contract, and where the seller may be able to keep their list price as far as what's contracted, but there are being more seller concessions offered. So the seller will buy down the rate for the buyer to get the contract executed.
Gotcha.
Mm-hmm.
Aaron, what do you have to say on that topic?
Yeah, no, she's absolutely right. And when rates first came up with that initial spike, we saw people just scrambling for those types of deals. We're not seeing as many of them now. Um, and I think Susan explained it correctly, but on her end, like she said, it's still a seller's market. And so if there is a line down the street, not a lot of these sellers are willing to kick in any money, and because they know they might have an offer coming in, just no concessions, over asking price. But it depends. All situations are different. But yeah, people are just trying to do something to alleviate having to just, you know, have those 3% rates and in the high twos for those COVID years. And now coming out of that, you know, they're being, if they're not paying attention, and now they're going to buy a house and they're being told they have to take 7.5, it's a little bit of a shock. So yeah, every bank is, they're definitely making it a little more difficult to qualify. And people can't qualify for the houses that they were maybe pre-approved for 2 years ago. So
Gotcha.
yeah, it's definitely something where you have to prepare. You have to get with a mortgage advisor, and you have to be ready. Um, and Susan will tell you that there are some houses that when they go on the market, they want to be sold in a few weeks, and you can't come in and not already have a plan and tell them that your mortgage person can get you closed in 45 days. That's not going to fly.
Mm-mm.
Yeah, that makes sense. All
Yeah.
right, well, let's switch gears for a little bit here. This question came up. How are we conditioned to look at interest rates? When I look at that particular question, Susan, you have brought it up earlier when you talk about the media and just the influence that it has. And this is not to attack the media. Let me start off by saying that this is just the information that's given at the time by the media based on where things are. And for consumers, I don't know, it creates a spin tail within us, right? We react to it
Yes.
specifically without actually getting all the information. So, how would you prep somebody right now? They're brand new, they're coming into their career, they got their family, they're coming into the marketplace right now looking for a home. What would you tell them?
Well, I would tell them that it's always better to buy than to rent if you can. You have equity in your home, you have your tax incentives from owning a home. You can decorate your own home. You can make it your own, no matter what that is. When you rent a home, rents are incredibly high, and they're just high, and that's just money out the door. You're getting nothing for it. And when you leave and end your lease and move on, that money's just gone. It went to the landlord. They did something with it. But if you can, buying is better than renting. But that being said, in order to buy, you need to buy when it's right for you. So a little bit down, there are still great programs that I know Aaron knows about where you don't have to have a ton down, but you need to be able to make that payment. And if you back into it, a lot of these payments are very similar to what you'd pay in rent.
Right.
So to have a little bit down, get in the right program, talk to the right people, and it doesn't have to be your forever home, but something you can make your own is a better way to get started. So I would tell anybody that has that aspiration to own a property to talk to the right people, talk to Aaron, talk to a mortgage lender that can paint a picture for them about what that will look like, and then get with a great realtor to show them some options. Location matters, but our valley here in Arizona is so vast and our infrastructure is so good that there are places you can live that might be a little further out than you thought you wanted to be. But again, because so many people still are working from home, people are working varied flex hours. So it's not as if our commute is always that 8 to 5 like it used to be when I was commuting. And now we have our phones and we can talk hands free and listen to some great music. So, so I would say talk to the right people and have a plan for at least purchasing something in the very near future if that's what fits for you.
That's fair. Okay. Thank you for that. And now, Aaron, when you look at it from a buyer's perspective, and I'm coming into the marketplace, I'm going to create a picture for you. 750 credit score, my income matches, and everything looks good, and I still get approached with a 6.5, percent. Is that? I mean, how do you speak to that person from an interest rate perspective and getting prepared?
Yeah, it's funny you say that because I've had that happen twice already today. And
Mm,
there's so much marketing out there and there's so many ads out there. And, we're just trained to talk about the 30-year fixed. That's kind of like the default. And, I'm going to tell someone when I'm quoting them a rate, I'm going to give them something that doesn't cost any points and kind of start from there. If people want to talk about buying points, great. But you're going to see all these advertisements out there, these the clickbait and everything like that. They need to show a rate that's below the real rate. And in the fine print, it'll say, based on a couple points, or based on, 800 credit, or based on a certain loan amount, or putting 40% down. Like, those are things that they kind of loaded up with. But then you click on that, you call, hey, I want that rate. Then they're going to kind of start from the beginning and say, okay, let's step back and get all your information. Oh, well, if you want that 6.5, it's going to be 3.5 points, on a $500,000 loan. That's 17.5 grand to do that loan.
Right.
So it's and we see it every day on all kinds of different websites, and we shake our heads, and we just hope that the people that we talk to, we're able to educate enough to let them know that, hey, this is our rate, but make sure you weigh the points, the origination fees, the costs that any other lender that's, if you hear a lower rate, it's not rocket science. We all get our money from the same Fannie and Freddie.
That's
It's
right.
not like there's some secret out there. It's all about what the companies want to make on the back end. And with us, we try to keep those numbers down, and we cut them so that we can be really, really aggressive and really competitive, so that people tell their friends about us. Whereas I know buddies at different companies that will remain nameless that they make almost as much as a realtor does on their we typically make a third or a quarter um, of what a realtor does. A lot, a lot of work. They do a lot of running around, and they get paid on the purchase price. We get paid on the loan amount, and then we get paid a smaller amount. But there are guys in the mortgage business that I know that when things slow down like this, they kind of raise their comp, which, again, not rocket science. That means you have to give the borrower a higher rate to make that higher commission. So there's all kinds of tricks that you see out there, and you're bringing up a good point where you can click on any website now and see things that you are not going to have on your final closing statement.
Aaron,
Sure.
is it still true that a buyer can talk to as many mortgage lenders as they want within 30 days and it's only one check on their credit?
Yes. Yep. That's if you have it only counts the first hard pull is the only one that's going to show up, and they did that just to protect the borrower and let them shop around and try to get the best deal. Um, and the other thing that is coming up on a day-to-day basis now is somebody gets that first hard credit pull, they're going to get inundated with phone calls from all the scavengers out there that I don't know how this is still going on and how it's legal, but Experian, Equifax, TransUnion, they're legally able to sell not all your details of your information, but the fact that you got your credit pulled. So they sell them to all these lead generating companies. And so I have it all the time where if I'm talking to someone at the very beginning of the process, I'll tell them, go on to opt out pre-screen, get your name in there so that they can't call you. It's kind of like the old do not call list on our home phones. Um, but if they don't do that in advance, once that's clicked, they're going to get inundated from people all over the country just trying to get that deal.
And I would say too on that, if it is a buyer working with a realtor, they've met them. They've gone out looking at homes with them. They've created a report. They trust them. If you've got a great realtor, I'd hope it'd be me. No, if you've got a great realtor, trust in who their resources are. Quite honestly, I've been doing this a long time, and I have great resources, and it's not so Aaron doesn't give me anything for referring him, but I trust him implicitly with my clients because I do work with a lot of mortgage companies and banks included when my clients have chosen their own lender. If they ask me, I will give them three that I know are great. And I would hope they'd call all three and create that conversation, ask those questions, be very aware that the first one is not always the best one, but also feel good with your decision, and you will need to make one. And then it should be real positive throughout the process.
You guys are bringing up a really good point, and it's causing me to kind of go off the grid for a minute here. So let me ask this question: how big does honesty play a part in your industry as far as the moments like these? So, Aaron, you have brought up circumstances where there's clickbait. So that means I'm going to go ahead and post the lowest presentable interest rate without, being too fraudulent, to get the leads in. But inevitably, you come back to where everything is. How does this shift the marketplace as a whole as far as consumer trust is concerned?
Yeah, I think it's a huge thing out there, and you can definitely tell when you've met somebody who is questioning me a lot more than normal. And I usually say that right away. I said, let me guess, you've been through this process before, and you might have got burned, or you were told something that didn't match up, and that's definitely the case. And that's why, Susan brought up a couple of great points where if I get someone and I know everybody's shopping, no matter where I get the lead, there's just too much information out there these days. So I try to tell them the steps so that they don't get burned. So, number one, you call me today, and then you take a day or two and you call somebody else and they give you a little bit better rate. Rates change every day, sometimes multiple times a day. So you want to get that hour or two during a certain day that you want to call everybody and say, hey, I'm making my decision within the next couple hours. What's the best deal you can get for me, so that you're not missing out on anything. And vice versa. I've had people where they call me, they wait a couple days, they call other people, the other people's rates are much higher, and then they come back to me and they say, you know, well, I'm getting much higher rates, and then I have to re-quote them, and they're like, oh well, that's bait and switch. Why are you so high today? You told me your rate the other day, and I say, but do you remember that I told you that after we hang up the phone, the rates could change 10 minutes later. It's very different. Uh, it's just a very different environment right now, and it's a bigger roller coaster than ever. So you just you have to be diligent about, hey, I want to make my decision. I'm making it today. Let's go see the costs and the rate and everything out there so we can get locked in, and then you can sleep at night. Not, I mean, it's a risk, it's a gamble. It's if you take your time to try to lock something in and you wait a week, you know, luckily we just saw rates go down about 0.25% over the last 3 or 4 business days. But when it goes the other way, it goes even quicker. They
Right.
they they
So,
take it they
Aaron,
take it away a lot quicker than
can
they
you
give
tell
it.
our group when can they lock a rate?
I mean, you can basically lock the rate by just, I mean, a lot of times I take people's word for it because I don't want to wait for them to, you know, go talk to their husband or wife and come back just because of how volatile it is. But if I have somebody's application and they've signed the e-consent and everything like that, and they give me the okay to pull their credit, I'm able to lock the rate pretty much right away. I mean, we typically want to see somebody click through the application and do all those things first, because we've run into plenty of people, and I'm sure Susan's run into plenty of people that are, talking to different realtors, and there's a lot of people out there that just aren't that upfront about it. Um, so you kind of have to have a feeling, because you don't want to be locking rates and then have that loan go bad. I mean, people don't really think about the stuff that goes on in the background here, but we kind of get dinged every time. If we lock a loan and we're just locking it for every person we talk to, it's going to be a lot of money that's not closing on the back end and secondary. And it definitely makes us as a company and as a loan officer not look great when that happens. But the
So,
bottom line
so
is,
you're judicious about it, but you could lock it before they're under contract.
correct. Well, yeah, you definitely have to lock by an address.
Okay, that's
Yeah,
what I
so
thought. That's what I
yeah.
wanted to.
But
Yeah.
there are a couple things where we have a lock and shop program where we can, if somebody thinks, hey, the rates are going to be going up here, I'm not happy about the news that's going on or the reports that might come out next week, so I just want to lock in right now. I'm going to lock it for 60 days, but they just got to make sure they get an accepted contract, and then I can add the address later. But it's a little bit of a premium to do that when you're locking without an address.
Okay, and how long? So you lock a rate and it does go down. Can you
We you can
readjust? Can you adjust that rate in
you
the
can you
during
can
the
renegotiate.
transaction?
You can definitely renegotiate. So, if you did that with your stockbroker and you bought a stock today and you bought it at $10 and then a week later it's now at $8, you're not going to be able to call your broker back and say, you know what, can you just delete the $10 trade? I'd rather have it at $8.
Oh,
It's
come on.
it's
I'm just
I know, I wish. So that's the thing. It's because of some of the environments we've been in with rates and such craziness. There's a lot of loans that go bad and that we have to break our contract with and lower somebody's rate because they're just going to pick up and go somewhere else. Um, and so there is a negotiation to it because the investors on the backside, if there's a huge shift and things drop 0.5% in a couple weeks, they know that everybody in that locked pipeline is going to be looking to go elsewhere. So I try to tell people up front that if that happens, I'm not going to be able to go back to the investor and say, hey, I'm going to get you today's market rate because we're going to take a little bit of a hit. So, but obviously, if rates go up, then you're protected. I'm not going to go call you back and say, hey, you have a quarter, 0.5% higher rate. But if it did drop 0.5%, we're going to be able to go back, renegotiate, and probably get a quarter to 3/8 better. We're never going to be able to get to the market, but we're still going to be able to renegotiate and help that person out because it doesn't happen that often. But we want to keep people happy, and we'll take a little bit of a hit on the back end with our secondary department to do that.
All right. Well, no, this is good conversation, very good information. And this, when you talk about the marketplace, this is always, and I mean always, what I deem to be an issue, no matter if the marketplace is good or bad, and that is that waiting game. And part of the waiting game comes with the fact of when people see a good interest rate, it seems like people think, well, if I wait just a month or another week, the interest rates will drop even lower. And it's kind of that consumer mentality, I believe, that, just want to make sure that you're shopping, getting the best deal. But in this environment, is that waiting game going to pay off, or is it going to possibly shoot you in the foot? And we'll start with Susan on this question.
Well, I have actually a couple examples. And, you always want the best for people. And sometimes what we say, because again, I don't have a crystal ball, and that's just what I have to tell people. I do follow a lot of projections for our future market. One is our local Cromford report, but and having boots on the ground, if you will, feeling our market, talking to people, listening to people. And that being said, I have some wonderful clients that have been looking for a home in our valley for about 3 years, but they really felt that the market was going to go down, really down. And unfortunately, this last year, they've been in a rental, and the rental is costing $8,500 a month. So, and before that, they were in a rental for about $4,000 a month. That being said, they are trying to get out of their current rental, sublease it, because they are now realizing that prices aren't coming down and interest rates are only going up. That's my example to say when you need a home and it is your time and you have a little bit saved, go ahead and when it feels right to you, get your home. And if they had done this, they would have saved over $80,000 and plus in rental money that went nowhere. So that being said, that could absolutely help with the down payment. It could have paid for an incredible vacation, a few nice handbags, whatever. Anyway, so I would say
Some
that
golf
we
clubs.
we don't know. I am hearing, but again, I am hearing rates will go up still a little bit before they might come down again. So if you are looking for a home in Arizona, my story is go ahead and get your home now. We do not have enough supply. So we do not see prices of homes going down much in the future. We still have companies bringing people here. We have a huge semiconductor plant being built that's going to bring a lot of folks to Arizona. We have beautiful weather. We don't have any hurricanes and we don't have snow flurries. So come see us.
What about you, Aaron? What does the waiting game look like for people when it comes to locking in that rate and making good rate decisions per se?
Well, first of all, I feel like I know the people that she's talking about, and I feel like there's a whole slew of people in that same position, because I remember when this whole thing started, all those friends and all those people that we meet that know the future and have that crystal ball had told us, I'm just going to wait. I'm just going to wait till the market's going to crash, values are going to come down, and the total opposite has happened. So I feel like if we could do an advertisement, kind of with before and afters. I mean, we're not allowed to call these people and say, I told you so. But I mean, when it was going on, I'm not the type of person that's going to tell them, hey, you're wrong, because I didn't know either. So I wasn't going to, it could have happened. But there were so many people that just called me every day and said, hey, I know you pre-qualified me, but I'm going to sit on hold. I'm going to rent for 6 months or a year. And when this market crashes, I'm going to jump all over it. And what I told them is, do you think you're the only one thinking this? So when that happens, you're going to have a whole other slew of people that are going to be doing the same thing. And then all that competition comes back. Whereas if you can afford something right now, like Susan was saying, why not get into it? If you can afford the payment, even though it's higher than, your mind is a dangerous thing. You just, all you think about is these last several years. And, like you said, Maurice, I mean, we're kind of programmed to think, oh, rates are at 3% forever. This is great. But there's just so many people who did that. And now, like Susan was saying, like, you're so many years back with your down payment, all that rent going out the window, and a lot of stress and probably a lot of sleepless nights, because you're waking up every morning thinking a miracle's going to happen, and it's just, we continue to go the other way. And the last thing that I'll say about that, the whole prediction is, we heard, not that Fannie Mae's right too often, but we just heard something the other day that said that their projections are, the low sixes by the end of the year. But if you hear the experts talk, nobody agrees with it. So nobody knows where they get this stuff. And I would never, I talk about it all the time with people, but I say the same thing. If you want to bet on that, great. Go throw money on a baseball game tonight. It's the same odds. Cross your fingers that it's going to happen, because you're just, if you want to risk like that, be a day trader, go out and be a sports gambler, because it's all the same risk. You're not,
Like
there's
the
no,
guy that almost had a no hitter, and then in the ninth inning,
yeah.
dropped. Oh, felt so
Yeah,
bad for him.
it's a risky game right now, but like I said, we keep talking about all the information out there on the internet and everywhere you look right now. And I think people listen to one or two people that might say something, and they just latch onto that, and oh no, rates are coming down. Rates and values are both coming down by the end of 2023. How's that going for you? It's just not, yeah. Like me and Susan keep preaching to people as a team and on our own, if you can afford the place and it's a place you can see you and your family being in, doesn't have to be long term, but you're going to start building up that equity. And as we've seen, the equity continues to go up, even though everybody said that the market was going to crash. So 2 years from now, maybe you have another 50 grand of equity in there, and you can refinance, or you can sell that place for more and go buy another place when the interest rates are lower. There's so many different scenarios we can sit here and talk about all day about, but it just comes back to doing what's right for you and your family, finding the best deal, finding the best realtor and mortgage person to deal with, and go from there.
Perfect. And thank you the two of you for clearing this up. And I'm gonna swivel this back to Susan, because I feel like in a marketplace like this, if it's that hard to really lock down where the interest rates are going, inventory must be a nightmare in order to as well, in order to find the new home that you're looking for that's suitable for you? Or do you feel like the marketplace is allowing ease for a new buyer to find a new home?
Well, when you say a new buyer, I have young adult children, and right now it's a little tough for them to afford a property because they still have some college debt they're dealing with, things like that. So you really do have to paint the whole picture. And when you say new, is it new as in new for the person, or new construction? So Arizona as a whole, it's not exact, but as a whole, our Scottsdale Valley, which is about 6 miles wide and about 26 miles long, most of that land was built out by about 2005. Are there pockets? Yes, there are. But where a developer could maybe build 6 new homes or what have you, there's some horse land that they could build some new homes. So, what we have for starter homes, new, smaller homes, are in our peripherals. We've got Santan Valley, um, down to Maricopa, and some places like that. Up north, our used to be far north was Anthem, and they have been there for a little while, and they've maintained their value. So finding a home, it's a conversation. So if you're not looking at a new build, but new for you and your family to the area, or just a different floor plan or what have you, it's a process. There are homes listed, and you might have to have more of a vision than you did in a different market when there are more homes available. And that vision is working with someone who also, I work with contractors. My dad was an engineer. I've built my own new home, so I can be in the home and we can talk about it. What would it kind of take on a budget to make this feel like a livable property, as long as you're in a good location? So that's what I would say. It can always be done. There's a home for everybody, and it just depends on the time frame that you want to take and what the give and takes will be for it.
That makes sense. I'm gonna swivel this question to both of you. I'm gonna start with Aaron here because I know preparedness. You're probably one of the first people that needs to be in contact with a buyer or seller during the mortgage loan process. But what is being prepared, and how does a person prepare themselves to enter into this market, credit wise? Just kind of give us a little bit of that story.
Yeah, I tell people that it's never too early, and you know, a lot of people come to me and Susan, and they'll start right off by saying, "Yeah, I'm not buying until, the beginning of next year." And then they, once you get that itch, it's kind of tough to just, you know, put it on the back burner. And there's people driving down streets and seeing for sale signs in neighborhoods that they like, and then they're calling me the next, week saying they want to put an offer in. So it happens really quickly once you get in that mindset. It's really tough to just say, hey, I want to stop renting. I want to find my own place, but I'm going to wait 6 months. It's just not something that happens too often. But in that case, I tell people, listen, if you think you want to do this in 3, 4, 6 months, it can't hurt you to get prepared right now, because there's things that you don't know, that you might not know, that's on your credit. There's also things that, like Susan already pointed out, you might think that, the rent you're paying is a certain amount, but the mortgage is going to be so much higher. I've had so many of those conversations where people come to me, because I always say to them, listen, even if you're not putting in an offer today, send me a couple houses that you could see you and your family living in. Let me show you what the monthly numbers would look like right now. And then I send it to them, and they're like, wow, that's not as much as I thought it was going to be compared to the, $3,000 a month they're paying in rent right now. So that kind of gets the wheels going. And then, yeah, it's just all about doing the application, getting the documents up front, because of the market we're in, where it's still really competitive. That if you have an offer in and you're totally pre-approved and you can close in 2.5 weeks or something really quickly, you're going to be just a step ahead. And as Susan can tell you, she's dealt with several losses where her people lose out to either higher prices or cash deals or anything. But it's just one more thing that she can come to the table with for you and say, hey, I have a totally approved run through underwriting, approved borrower. They can close in 2 weeks. All we got to do is the appraisal. And it's a huge comfort level for that seller to be able to know that, instead of, hey, it's somebody that hasn't even started the process yet. No, we need 45 days to get this closed. It's a huge thing. So preparing is huge right now in this market. You can't. I could tell you so many stories about people who have got beaten out because they thought they wanted to do it their way. They didn't want to listen to someone who's been doing this for over 20 years to tell them, hey, I think we might. And then it takes them a couple losses to finally realize, oh, you know what, maybe I'll listen to you. So then by then it might be too late, and then they wait another 6 months till they find a place that they like. So yeah, preparing early is never a bad thing. It's better to get that, and then if we have to update some documents later, but at least it gives me the whole picture, and I can kind of direct them to the program or the product that's going to work for them the best.
All right. What about you, Susan? What does preparing look like in your world?
Well, a couple things that come up sometimes. It's interesting what people know but don't know. So I had some clients in Florida. He was going to quit his job and move to Arizona, and I said, "Oh, no, 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 no. So you are you going to have a job here?" And he said, "No, I'm in the service industry, and I'll get one after I get home." That's backwards. So keep your job and buy a home, and then do what you need to do. But things about preparedness are understanding what you need to focus on. And focus on is, if you've got some dings on your credit, fixing those. If you've got to get a new car, get that new car before you're looking to buy a home, not during the home process, because the final underwriting will say, wait a second, you went shopping. Whether it's so, don't do that. Don't do that during the home buying process. So preparedness is talking to your realtor, understanding areas. We've got a vast valley, understanding those areas and what fits you, driving neighborhoods and knowing what feels comfortable, logging your commute, not just Googling it on a Saturday at noon, but look at it when you would actually be driving to work. So, because Google does on the time frame that you're looking it up, not on what it would be at all times. So, preparedness is just having a team behind you, having the right realtor, having the right mortgage person, and knowing the area you want to live in.
Okay. And thank you too for that. As we round the corner to the close of this show, I want to give the both of you the opportunity to leave the audience with some final thoughts as to what they need to do now, and again, how going forward should they operate right now in this marketplace? What would you suggest? And we'll go ahead and start with you, Aaron.
How to navigate in it? Yeah, I mean, I think we've talked about it several times, and you just have to find something that's comfortable for you. Uh, I try not to steer people onto places that are at the very very top of their ceiling. But like I said in the last segment, you can find places right now that are right near or below the rents, and with all the bonuses with the taxes and being able to make the home your own and everything else, I just think it all outweighs um, sitting there and renting until you feel comfortable to buy a place, because that level might not come for another couple of years. And like Susan's already pointed out several times, that's just a lot of your down payment going out the window on rent.
Fantastic. What about you, Susan? What's your final thoughts?
have a good team. It's all about working with a great team. So that's where I would leave that.
That's fair. You heard it here, folks. Before we exit today's show, I want to thank Susan and also Aaron for taking the time out of your schedules to talk about this. Obviously, this is a huge concern, and the way that the two of you addressed it goes to show your level of professionalism and your capability in the marketplace. And I just want to again thank you guys for sorting everything out and not really going against the media, but sorting everything out in a way that people can really understand and truly understand the marketplace and move correctly. So again, thank you for the service that you two provide, and we'll definitely have the both of you back.
Thank you very much.
Thank you, Maurice. Thank you, Executive Talk, for having us on. We appreciate you and your time.
It's our pleasure.
Thanks for having me.
Susan, we'll see you next month. Aaron, we'll see you next time. Again, everybody, this is the type of information that you need to know when you want to make moves in the marketplace. You don't want to go out there with your consumer understanding, which is not bad. But again, the professionals they're looking at this every single day, looking at multiple scenarios that you may have not experienced since you last checked. Working with professionals such as Susan and also Aaron gives you that comfort, gives you that security, knowing that you're going to be taken care of. And those are the type of people you want to work with in this marketplace. So if you're moving to Arizona, relocating, or if you are in the Arizona marketplace, please ensure that you reach out to these two, and we'll leave their information in our network, and you can make sure you get a hold of them. But in the meantime, the three of us, we actually have to get back to work. So we'll see you next time.